How do money market accounts work? Banks offer a variety of options for our everyday banking needs and to help us save. While one option, the checking account, gives us the ability to make deposit, multiple cash withdrawals, make purchases, write check, and do transfer, the saving account gives us a risk-free place to put our cash while the balance collect interest. But is there a happy medium? There is one type of account that offers the best of both worlds, the money market account. But just what exactly is this type of account and how does it work? A short history of money market account. Banks created money market account MMA to offer more competitive interest rate than those offered by traditional saving account. But that doesn't come without a cost. The trade-off for higher rate is often a higher minimum deposit requirement. With many MMA, the account has to maintain a minimum daily balance to achieve the highest available interest rate. Many MMA have tiered saving levels that offer higher interest rate for higher levels of saving. MMA became popular during the 1980s when interest rate rose into the double digit, giving depositors an opportunity to generate high risk-free returns. Investing deposits for MMA are often held in vehicles such as certificate of deposit, government securities, and commercial paper that offer higher yields than are generally found in saving account. Checking or saving? There tends to be some confusion about what a money market account actually is. An MMA is neither a checking nor a saving account, but it does have a certain characteristics that are similar to both. Money market accounts usually offer higher yields than saving account. They are able to offer a more attractive interest rate by setting a higher minimum balance requirement and through possible restriction on the number of withdrawals that can be made over a given period of time. The purpose of Regulation D in limiting withdrawal transaction was to help banks meet the reserve requirement. Similarities to checking account. MMA are deposit accounts insured by the Federal Deposit Insurance Corporation (FDIC). They are offered by banks, credit unions, and other financial institutions like those that operate online. An MMA has several benefits that offer benefits that resemble a checking account. First, some money market accounts offer debit cards. This allows account holders to make cash withdrawals or purchases at retailers using the card. If the institution offers online banking privilege, customers can also make transfer and pay bills the same way they would with a checking account. Saving element. While it has some elements of a checking account, the main point of an MMA is the saving portion. This means the account balance earns interest. Unlike a traditional saving account holders generally enjoy a higher rate. Many MMA offer interest based on a tiered balance. Lower balance get a lower rate, while higher balance are rewarded with more interest. Institution can justify the higher interest rate by putting a minimum balance requirement. If the account holder's balance goes under this amount, the bank may be able to cut the high interest rate down. Banks can also charge fees for not meeting the minimum balance. Money market account may come with withdrawal limits. Prior to April 24, 2020, as stipulated by the Federal Reserve Regulation D, saving deposit account holders were limited to 6 withdrawals per month. If more than 6 withdrawals were made, an account could be charged a penalty. This limitation has since been removed, but some banks may still place limit on withdrawal. Can you lose money in a money market account? You cannot lose money in your money market account. Money market accounts are insured by the Federal Deposit Insurance Corporation (FDIC). If the account is at a bank and by the National Credit Union Administration (NCUA) if the account is at a credit union. Is it worth it to put money in a money market account? It can be worth putting money into a money market account depending on the needs of the specific individual. A money market account will come with a higher interest rate than a traditional saving account, allowing the account holder to earn more money on their deposit. Money market accounts have easier access when compared to traditional saving accounts and are also protected by either the FDIC or NCUA. Thank you.